is Morning Call, live from CNBC TV 18 headquarters in Mumbai.
Good morning. Welcome to Morning Call. I'm Lata Venkatesh. With me are Sonia Shenoy and Anuj Singhal. Well, the key trends from the global markets is that commodities are beginning to recede a bit. That's a little positive for us, but actually it's wait and watch as far as equity markets are concerned since earnings season starts in the United States. The last data we have that Asian markets are reacting to are the Chinese trade numbers. The imports have fallen rather drastically by about 17%, but exports have not fallen much. The fall in imports is going to be negative for all the countries importing to China, so it's not very good data, but at least the fact that exports have not fallen much is intrinsically not as bad data as we saw in the previous month. Previous month exports had fallen by 6.3%, so compared to that, the fall in exports is not much, but imports is a very bad number, and therefore you can't call it good news as far as global economic growth is concerned. However, Indian numbers were spectacular. Very good news after a long time on industrial output in particular. Hi, both of you.
Hi Lata, good morning. Hi Anuj, good morning. It's good, the data that we're getting locally. The IIP expanded 6.4% year on year. Even in global markets, the US markets have seen a 7th straight session of a good run. So global cues are fairly stable as well. But just coming back to the macro data, how much of it will the market react to? Because generally, you know, the data comes with a bit of a lag and the market is prepared for such data. But this time around, do you think it will be a surprise?
My sense is this time it is going to be taken positively. One, because it's a very good number. It's the highest in 3 years. As well, even if you looked at the 4-month data, see, the problem with the IIP is that it is extremely volatile and therefore unreliable. But if you looked at the 4-month data, that is April, August, even then it's come to 4.1%. So one assumes that, you know, the volatility has been kind of moderated. Even then 4.1 is a decent number. Where are you seeing 4% growth anywhere in the world in industrial, pure industrial output? This doesn't include services. In pure manufacturing, an output like that is very good. And even within that, manufacturing grew by 6.9%, which is, I think, a very good number. Within that, it's capital goods and consumer durables that are very heartening. Consumer goods, for instance, capital goods, for instance, rising by 22%. Again, it's, you know, lumpy. But if you look through the lumpiness and look at the April-August data, even then you get a 7.1%. So you will have to say that things are a little better in the first 4 months of this year, first 5 months of this year compared to the first 5 months of last year. I think you can slice it and dice it any way you like, but these are good numbers.
All right, so these are good numbers and the market will take it positively. For our own markets, FIIs continue to buy. So yesterday they bought more than 300 crores. However, domestic institutions have been selling for 5 straight sessions now. So yesterday as well, we got a sell figure of 175 crores. Anuj, hi, morning. This is something that, you know, we've been slightly cautious about for the last couple of days, the way domestic institutions are selling. And you think that will continue to keep the upside for this market capped around that 100 DMA of 80 to 20?
Morning, Sonia. You know, I think here we might have to differentiate between correlation and causation. But one thing which stands out is that the market is at risk of topping out at 8200. So far, the market is doing good things. Make no mistake about that. This is an important resistance mark. This coincides with the 100-day moving average, and this is also a mark which was a massive support for the market on the way down. And it took this much time for the market to actually break this on the way down. So I'm not surprised that it's taking this much time for the market to take it out on the way up as well.
So is it a minor problem or is it a fairly major problem?
As of now, it's a minor problem, but it can become a fairly major problem as well. But that we'll know with the benefit of hindsight. And when would that happen? First of all, 8100 is the major support for the index. Trend for the market will change only if the Nifty slips below 8000. Till then, this is a market in which you'll have to believe that this is a buy on dips market, at least in the near term. With the support of, maybe sacrosanct stop loss of somewhere around 8,000. The other worry for me is the bank Nifty, because that's making heavy meal of this 50-day moving average, 17,600, 17,700. It's struggling. It's clearly struggling. And for a day or two, ICICI Bank supported, but really it's not been able to take this out. The cash market data, as we've been saying, FIs continue to buy, DIs continue to sell. And FI buying was important because this came despite the 700, 800 crore delivery-based selling in Infosys. Despite that, FIs actually net bought. So, ex of Infosys, there would have been a lot of buying. Now, F&O data has been very positive so far this series. This is the first indication of data turning from extremely bullish to moderately bullish. The first time you can add a bit of a but factor to this data, because FIs continue to buy index futures. Yesterday also 740 crores of index futures. So now, what we have seen, about 6,000 crores of index futures buying in this series. And again, a lot of long build-up, Lata. 30,000 fresh longs were added. 5,000 shorts were cut. So net long of 35,000 contracts is telling you that the momentum is intact. But as I said, first indication of call selling. Yesterday, FIs sold in index options, and I was looking at the data. It was 8,200 and 8,300 calls where selling was taking place. So, how do you want to read the data? How do you want to interpret the data? My simple understanding of this data is that you would have bought index futures yesterday with the hope that the market will still go up, but you would have sold calls at 8,200 and 8,300 just in case the market goes against you. If the market goes against you, at least your loss is protected because you would have sold higher level calls. But if the market goes in your favor, in that case, the upside seems capped at around 8,300, thereabouts.
All right, thanks Anuj for that. Well, moving on, let's tell you what you'll get to see on the show this morning.